All right. Good morning. Morning, David. Morning, Arturo, Valerie, Goose, Aaron, George, Al, Dan, Penny. Morning. Good morning. Good morning. Hey, Penny. Quick note for you and Goose. There is a new VIP chat in Discord for the VIP members. You can check it out. There is a new service coming up next week also that you have access to in Discord. Just want to throw that out there. So if you want to be a VIP member, you got to call in the team. And it's not cheap. So just throwing that out there. Kevin, good morning. Just letting people know. So anyway. All right. What a day. Nasdaq yesterday hitting the target I've been looking for gosh, how many months now? I mean, how many months? Y'all can let me know in the chat how many months I've been talking about that. Crazy stuff. Now, it's put us in a precarious position. I'm going to talk about it. And if you want to chat with us while we're doing this, go ahead and hit the subscribe button. That's all I require. You be a subscriber, and then you get to chat on the live stream. While you're at it, you might as well hit the alert with the doodads for all notifications so you can know when I go live every single morning about 9:10 before the market opens to talk about what's moving today. And then on Tuesdays, I do 2 live streams, and I do a 30 minutes of awesome afterwards. You know, like after the market closes, like 5 p.m.-ish Eastern time. So, yeah. Crazy stuff. Yeah, as Goose says in the chat there, scary stuff. Morning, Michael. So, all trading involves a substantial risk of loss. I may never predict another thing correct again after this NQ target. Past performance is not necessarily indicative of future results, remember. So, this presentation here, informational, educational, and fun. Hopefully you're having fun. If you're not having fun in life, think about it. What's the point? I mean, you need to have fun. You only get one chance at this thing. This thing right here, this show, not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, please hire and consult a financial advisor that has a fiduciary duty to take care of you. Morning, Sledge. Glad to see you. All right. As I said, what a day yesterday. What a day, what a day. Bitcoin still consolidating. Like, it's not participating in the big tech rally here. So let's talk about a few things. Let's pull these over. Now, why start out with the S&P? Well, look right here. What's the S&P been doing? Sideways, right? Little pop, maybe back up to the highs. Could drift higher into June. Please be careful. Watch out. All right. We can meet some volatility into June. This is a 20-year historical average right here. All right. This looks kind of like what the S&P's been doing. We kind of hit the highs, pop that back up right to the highs. All right. Keep this in mind when we go look at the S&P 500 chart right here. This is just the 20-year seasonal average of what the S&P 500 does. We can see increased volatility and a lower low in June than anything we saw in May. That kind of fits with my narrative, maybe popping up to that 4,300 level and then getting a pullback. So, morning, Jan. Glad to have you on the stream. So, right now, I'm cautious, all right? Cautious. Now let's talk about another one here. Volatility. This is VIX. You know, this is S&P 500, based on S&P 500, not based on Nasdaq. We typically see VIX get a dip. The SVXY yesterday got a pop, which if you inverse that, we actually made a lower low, and we could see increased volatility heading into June. This is a major OPEX day today. There's quite a few options rolling off on the monthly. Morning, Pat. Morning. Glad to have everybody. So we're going to talk about the QQQ here in just 1 second. I just want to frame this first, all right? Since the S&P has been lagging, just keep in mind, we can see increased volatility on the S&P 500. It doesn't have to catch up to the NQ, all right? Now, NASDAQ, ignore this big red blob. I grabbed this from a couple months back, right? We usually see, look at this, strong rally into May. We typically see a pullback, but we didn't get a pullback. We've just been rallying. So maybe the pullback happened before. Now we're getting the strong rally, and then we go into some chop. All right? So just kind of shift this in your mental picture just a little bit, and maybe we're doing this right here early, and we get this chop into June. All right? Be careful. Big tech doesn't have to keep ripping. Now, we're going to talk about what I was actually seeing. So, rewind a couple weeks. I predicted, I had this 1-2 set up with right down to this purple fib here. I drew a big oval on the target and said big oval target, said we're probably heading up here. Well, it took a little longer than I thought, a couple extra days, but we hit right up there. And on the 4-hour chart here, we stopped. That's 4 hours, 4 hours, 4 hours, 4 hours. So, 12 hours-ish, maybe 16 hours-ish. We've been parked right here at this 1618 fib. Now, that was a typical target for this 3 right here, this parenthesis 3. All right. Morning, Arthur. That was the typical target. Now, 3 is not, if you know anything about Elliott wave, 3 is kind of in the middle. That's the most powerful, strongest wave that we shoot for. As we work through 4 and 5, while we can get some extension on 3, it's likely to be choppy and frustrating. All right, wave 4s tend to frustrate a lot of traders who are trading for continuation of wave 5. Now we could see a pullback into this area right here, or we could see a bigger pullback down even further, or this 3 can extend. All right, we've had a lot of people short. Now, one thing I want to talk about is the fact that right here, just a few days ago on May 16th, trying to look, 3 days back, we ended the day with a big short interest. All right, this indicator down here, while similar to my CVD thing, not exactly the same. This uses time and sales data to aggregate the rough positioning on futures. We ended the day pretty big short right there on the 16th. And then yesterday, it looks like we stopped those contracts out. We ended up on a big net long on the day. That was probably a big stop out on that big rally. We had that big short right there on nothing. We'd kind of parked sideways, hit a big short, and then ripped the shorts. All right, this is what the computerized trading algos do. And we're talking 10,000 contracts. If you're talking on ES, 10,000 contracts is kind of small, but on NQ, that's really a big swing. We had a negative almost 9,000, and then we went to a net long 10,000, over 10,000 by the close yesterday. Starting out today, reshorting. All right, that probably some people closing their longs, booking their profits. CTAs. When I say some people, it may just be computers. A lot of the trading is computers. So, what am I saying? Be freaking careful. That move can be done, and we can pull back. We can pull back to this level right in here, and we can chop in that level for a little bit and drift higher. All right. Anybody unclear on this? Let me know in the chat. I can go back. But that's what I'm kind of seeing right now. So that fits with chopping right here. Those 4 5 4 5. We may get the 4, a 5, marginal higher high, 4, and then an extension. Okay. Now, on to the live chart here. So, we've got NQ, as I said, poking up just barely through that prior high. Now, a couple scenarios here. We didn't get the all clear on the debt ceiling. That threat's sitting out there. All right, that's kind of like a known unknown. All right. We didn't get the all clear, despite that rally. That is potentially big tech, like people loading up, people ripping each other, people, I suggested it was going to happen. It was in the chart. It looked very likely to happen. And now we don't have to get much else. Like we can churn sideways a little bit in this area. We could pop up a bit more, potentially to where this other consolidation was right here. Potentially where this high was up here. We could extend. And then turn down. Or we could park here for a short period and then get a bigger retrace. These are all possible right now. There's no clear path on NQ at this moment. All right. It doesn't have to get continuation. This can be a fake out, a fake breakout, fake out, you know, a little higher high potentially. And what really scares me is that level right there is the 618 right there. It wasn't updated on this chart, but right there, 618. If we hit that, we just pop right up there, hit it, bounce down, it can lead to a lower low than we saw in October. All right. This is like highway to the danger zone here. If we just rip right on up, hit that level right up in there, right near 14.4 on Nasdaq, it's like the danger zone right there. If I had a color that was, you know, more dangerous than red, I'd figure it out here. So be freaking careful. All right. Popping straight up to there can lead to a lower low than we saw back here in October. That scares me. All right. I just want to be really clear. Why am I so nervous right now? Why was I sounding the alarm bells in Discord? A pullback has gotten highly likely on big tech. It did the bullish thing I was expecting. We went and retested the high. We're slightly above it. That can lead to a pullback. Now, the lower probability thing in my mind right now is just to keep extending. I mean, just keep on trucking. We do have a major resistance right up there at that 618 level. We may get a pullback from there. It could be a small pullback. It could lead to that lower low. I want everybody on the stream right now to be crystal clear that this market is setting up for a potential lower low right now on Nasdaq and big tech. All right. If we rally right up into June 1st, they default on the debt, lower low. We didn't, you know, key thing, we did not get an all clear on the debt ceiling debate. All right. How to best play that? Yeah, short everything. Sell the wife, sell the kids. Buy puts on everything. Right now, I bought a SQQQ synthetic shares position out to June to kind of cover this potential pullback that can happen in the next couple of weeks. All right. You know, the AI craziness is fuel on the fire. That's true. They're going up. But things can end on a dime and people can start liquidating. Remember what I say. When you look at the market cap of something, only about 10% of that money exists. So even though we've gone up like crazy, if everybody starts selling, only about 10% of that money can come back out. It leads to giant drops. You got to have buyers to keep price stable. If everybody's selling, massive drop. All right. Yeah, it was in Discord. I'll grab the trade real quick. Hold on. Let me roll up and grab the trade. And I'll just show it off what I did. Since there's question about what I did. I closed Home Depot yesterday. Just wasn't feeling sparky about it. So, all right. Open in browser. Pull this out. Pull it over. Here's what I did right here. This is called synthetic shares. There is risk beyond the cost. The cost was $24, but the risk is $600. This is before it dropped on down to 25 yesterday. So maybe you adjust it down to 25, but you buy a call, you sell a put, at the same strike, and then you go down and buy a put at a lower strike. It's basically like a bull call spread, bull put spread, and a long call that gets financed by that bull put spread. Get your cost down near zero for out of pocket money, but then right there, you can see now it actually cost me $34, not $24, because of the fees. God love commissions and fees. Right there, $600 in commission for this account. That wasn't a huge. If this thing just keeps on running, that's not a huge loss in this account. Please keep your risk in check. All right. So there you go. Remember, that was not a recommendation to do that. That's just that's a way I'm playing it. Now, back to what I was saying though. That's where I led off with S&P 500 and Nasdaq not on the same path necessarily right now. So please be careful. They haven't been on the same path. All right, we were getting this chop, and now we're potentially getting a little pop. We're still quite short of the high. We can get that pop up there. Now, if S&P is going to do the same sort of pattern where we go up to that 618 level of this entire pullback, look right there, 43. Right now, where it's coming in right there. I do get very concerned if we pop on up to 45. There's a few layers of confluence for a bearish setup if we just pop right on up to that 45 level. But the 618 is sitting right there at that prior high. Does concern me. All right. We can turn down on both of these. Russell is lagging, potentially trying to break out here today to go retest the roadmap line. That can retest the roadmap line, turn down, and we can see the lower low. All this can happen on the debt ceiling default situation. All right. This is one of the precarious things. Like, did the markets know back in October when they made the bottom where they made them that we were going to come up and be sitting right at resistance for the debt ceiling default in June? Potentially turn down at those levels? I mean, this is one of those things that really mind bends me when I sit here and think about the bigger pattern and how this all works. All right. Let's go ahead and talk about the calendar for just a moment. What we have today, not a lot. Got a couple of Fed members speaking. Got Powell speaking at 11. Caution on that one. He can move the markets. Usually does. So we got some potential volatility coming up at 11 a.m. Eastern time. Next week, not really a whole lot happening on Monday. On Tuesday, not a ton for the U.S. We get the flash manufacturing PMI, new home sales, Richmond manufacturing. I mean, a few little things. Coming on down to Wednesday, still not a whole lot. We got Treasury Speaker Treasury Secretary Yellen speaking. Yellen about the markets probably at 10 a.m. Then we get a GDP number on Thursday. That will be a market mover more than likely. And then Friday, kind of benign with durable goods. Now, Thursday and Friday, I'm going to be traveling. I'll be back after that. We have the funeral for my father-in-law next Friday. So I will be a little bit out of pocket late next week. Just letting you know. All right. That's the calendar. That's kind of the outlook. Oh, look at that. AC, market's open. Things are moving. ACN potentially pushing above those highs. All right, oil churning in here. Still expected to go down and retest this support level right there. Gold still on the path to retest the roadmap line, and Bitcoin still on the path to retest the roadmap line. Dollar came up to test the roadmap line from the bottom. Do we turn down from here? We'll see. All right. What's the potential on the 3 contract SQQ trade? Unlimited. You know, realistic profit, say it goes back up to 33. You know, my 8 cents can turn into $6. So 24, 30, you know, $34 with commission turn into $600. That sounds pretty good. All right. Take two. Nice pop. It's 2 days in a row we're staying up here. Oh, I didn't refresh the list. Let's refresh the list. Back to the morning mustard list. MGRM, look at that, 100%, 248% up today. Whew. Nothing to, I mean, 2 candles doesn't make a chart I can do anything with. Deer popping up, retesting the roadmap line, probably retracing back down. That looks kind of bearish, actually. That reaction, that pop and drop. Watch out. If it does fill this gap, it could form a base and go higher. I wouldn't touch that right now until it breaks out above the roadmap line. I like to chase stuff long when the market's kind of drifting higher. RBC doesn't look like this was a pre-market popper, but now it doesn't look like so hot. So was hot, but now it's not. EOG, yeah, nice little pop there, but still below the roadmap line. Still looking, lots of stuff looking kind of bearish still. This is, it's one of those things. Now, S5FI came up right to the 50. Like 50% of stocks on the S&P 500 were above their 50-day moving average, 50% below. Now, NDFI for the Nasdaq, we're running about 60% above, 40% below. So things aren't overly cooked on the moving averages. Yeah, you could just buy straight SQQ calls. I just went with a synthetic because it was cheap. It did have exposure, it did have risk, but it was cheap. All right, moving on. SDA. That's a rough chart. That's a gnarly, volatile chart right there, and low priced. CAT coming back up, still below the roadmap line. TMV. Yeah, that's a nice move right there. Potential to come back up and retest the highs. 20-year Treasury, 3x bear. Zillow, just chopping around, not really doing a whole lot. Gush, opportunity to come back up here. Now, oil and gas exploration and production, 2x bull. I mean, if oil takes another dip, this one's probably going down. Be careful on that one. AGCO. That looks kind of bearish, even though we're getting a nice pop off the low yesterday. Yeah, notice a lot of these charts don't look so bullish. Like, there's a lot of opportunity in the market for everything to flip bullish, and we go on a mega run. But that's just not what we're getting right now. Like, this run higher on Nasdaq is just centered around a few names. So ALV also not great. Wow, what a gap down there on Foot Locker. Ouch. Must have disappointed on retail. Yeah. Missing on the top, missing on the bottom, getting smacked. Smack down. Right back to these lows. And that can be, that could potentially be something right there. Let's see. If we turn back up, I want to say a move up through 34 could be an opportunity to rally back to 41, potentially even get an extension. It's actually, despite that being kind of gnarly looking, that might have been a retest of support, and we launch out of here on Foot Locker. Now, you may not believe it with the earnings numbers, but oh, look at that. Right up to the target. MDB. Watch for a pullback. Back to the roadmap line. 1618 resistance. May pull back to the 100%, the breakout point, and then pull up to the resistance before it goes back to the roadmap line. Classic patterns are either to retrace to here. Let's zoom this up so we can see it a little better. Retrace back to the point from where it broke out. You see resistance, resistance, breakout. Run up to the 1618, retrace to there, before the extension. Or if that doesn't hold, back to the roadmap line. All right, Tesla up. Yeah, Tesla's been rocking. Dick's Sporting Goods, right back to the roadmap line. Watch for it to hold support and turn higher. Lots of lines on here. Let's see if I can remove a few. Beautiful three-wave pattern right into the roadmap line. We're going to have to turn up through 144 to indicate we're going higher again. Watch for a deeper retrace back into lower support. Nike, yeah, that's a three-wave. Watch for it to hold support in here somewhere. Find support and turn higher. That's one to put on the watch list for upcoming. Let's put this back to, there we go. That's support right in there. We could turn higher again on Nike. Snow, right up into resistance, finding some resistance, getting a little slam back down. Crocs, right down to the roadmap line, despite the banging earnings. And needs to hold here and turn higher if it's going to go higher. Otherwise, it can extend on down to maybe this consolidation area right over here. SPY, potential breakout. That target would be 428 right there off the last pullback. And QQQ, getting above the resistance. Caution on a pullback. That was one heck of an extended move. That went exponential. Exponential shit tends to go, exponential stuff tends to go back down. Be careful. Please be careful. Tesla, not really participating as much, but probably on a path to go test the roadmap line right there. All right, hasn't got sparky. Amazon, huge opportunity. This one's lagging, severely lagging. All right, like there's the August high in Q. Here's Amazon down here. That's still got like a 26%, 25, 26% rally to get back to that August high. So Amazon lagging, lots of big tech lagging. While you got MSFT outperforming, already breaking the March highs, way, already way above the August highs. And Apple over here, just trying to push above that August high. Didn't get the retrace yet. Well, at some point here, we're probably going to retrace to the roadmap line. Just keep it in mind. We're probably going to do it. If it does it up here, that's fine. It could do it here. We're going to do it sometime soon. Sooner or later. Google, breakout right there. Google pushing above the August high. That's a beautiful potential breakout. Next resistance up, probably 144 on Google, right up here. Unlikely to just go straight up there. Probably get a little consolidation. Yeah, so Amazon, look, you're worried about Amazon in the face of a pullback, but Amazon outperformed to the downside. While the market kind of rolls over, we could rotate a little bit and see Amazon catch back up, as these two things could meet somewhere in this zone down here. As Nasdaq pulled back a bit, Amazon could keep rallying a bit, and they can meet in the middle. So, TLT, big drop, going back down to the lows, probably right back down to 99, 98. Just chopping in the zone. We've got support right here. Line tool support right here where we made the lows, once, twice. Support there. Resistance up here where we've made several highs. Just chopping in this zone right here. And it didn't do that and hadn't broken out. And we're just staying in this zone, and I expect more sideways out of TLT at this point until we can either break down or break out. That's just, it's not really tradable for me at this point. There's nothing to expect it to do because it's just sitting sideways. So, all right, bias for the day, extreme caution. S&P 500 can and may rally right up to that point. I mean, we're basically at the breakout point. I'm just cautious, extremely cautious. We broke out above here. Can we hold on to it, or do we get another one of these drops? History has told me we dropped. We dropped. We dropped. In 4 days, we dropped big. Are we going to hold on to it this time? This is the point where we can pull back. History has been telling us we pull back from this zone. Be careful, please. All right. Now, the target, if we can maintain this breakout right up here around 4,300, please be careful. In Q, you can see already having a red day, having a little trouble holding on to that high. We may get that retrace. All right, NQ is ripe for the retrace. NQ can retrace while S&P goes higher. All right. Yeah, the question is, what catalyst pushes us higher from here? FOMO squeeze? I don't know. Yeah, remember that chart I let off with Nasdaq. It looked like there was a big short, and then yesterday was a big stop out. All right. We don't have another big short to stop out. Please be careful. The account you save may be your own. I'll update in Discord all day long, just like I always do. So if you want to join that conversation, links in the description. Many of you are already in Discord. So that's where we're at right now. All right. Any questions before I go? 1, 2, 3. Ask them in the chat. Otherwise, come ask in Discord. We'll keep the conversation going. Bye for now. Stay safe out there. Remember, the market does not have to get continuation from here. All right? Does not have to get continuation. This can be a fake out, a fake breakout. You know, lots of people are seeing this as a breakout, breaking above. That's ripe for a fake out, and we get the retrace. Just take everybody's money, and then we go higher. All right. Thanks for coming, everybody. Bye for now. I'll be live again Monday. Make sure you're subscribed and hit the bell with the notifications. We'll see you on Monday.